U.S. retail sales were weaker than expected in the month of February, rising just 0.2%. January's numbers revised lower, sparking concerns over the health of the consumer. With more retail earnings ahead, I want to bring in Oliver Chen, TD Cowen senior research analyst, for more on where retail investors can turn for safety amid uncertainty. And Oliver, great to speak with you. And I specifically mean, in this case, investors who are interested in the retail sector. Where can they find safety amid all of the questions about the health of the consumer right now? What names are you looking at?
Yeah, Madison, our best ideas include BJ's Wholesale. We also like Walmart and Costco. So thematically, bigger is better in terms of scale. And clearly, Walmart has a lot of supplier scale as well as navigating this dynamic tariff environment. The other thing we'd say, Madison, is this is the year of and, meaning retailers that offer needs plus wants, meaning retailers that offer food as well as discretionary. And these fit the bill too: Costco, Walmart, and BJ's. BJ's is our best idea this year in terms of the valuation being closer to 23 times versus Costco's 46 times PE ratio. We also love what Walmart is doing with technology in terms of digital advertising, the marketplaces, and artificial intelligence. So each of these carries really nice places to be. And the bottom line is also understanding and buying into safety, into free cash flow, into bricks meets clicks, and to stores plus digital. We're more concerned on discretionary. And as we look at the numbers speak for themselves in terms of Macy's guiding to negative 2% or more, Kohl's at negative 4 to 6%. On the other hand, Walmart at +4, Costco running at +8. There's a real bifurcation in terms of pure discretionary and then that need plus want theme.
Yeah, that's interesting in the context, too, of another name that you sent to us, which is LVMH. And I am interested in that, given some of the concern we've heard about how, the market being down is going to impact wealthy consumers. They're not going to have as much money to spend on some of those retail names. How are you thinking about a name like LVMH?
LVMH has tremendous scale. It's the second biggest market cap company in Europe, and it really has power brands such as Louis Vuitton as well as Dior. They also own Sephora too. Then they have champagne and wine. So it's very diversified. The bottom line is we love the scale at LVMH. However, we're being pretty selective. We recently upgraded Richemont Cartier, and what's happening there is consumers are still buying jewelry. They also like the quiet luxury trend of a lot of the franchises within Richemont and Cartier, such as Love and Santos. But we like LVMH too, but cautious optimism there, I'd say, especially because of China and lots of issues happening in China with the property market, something we're watching. And you're right. What happens in luxury is the feel-good factor is important, as well as the wealth effect on the S&P movement. So this recent market volatility is not helping consumer confidence, and it's a risk factor to look at. Diving deeper into luxury, our preference is for hard luxury versus soft, meaning Cartier, Richemont, jewelry, that's benefiting in this current environment as well, because overall, there's less anxiety than when the election was not resolved. It's been helping the Cartier numbers a lot. It's growing at around 10%.
Oliver, Adam Johnson, I run a tech fund, a growth fund, and I would love to leverage your expertise on retail. Can you help us understand how companies like Walmart, Costco, et cetera, are using AI to drive sales, whether it's tracking people around the store, tracking sales over time, rationalizing supply chains? Can you talk about that AI impact for these retailers, please?
Yeah, Adam, we are thrilled and excited. I teach a Columbia class in AI as well, but what's happening on a very boring level in AI is inventory management, and specifically using visual AI to determine if this product's in stock or not. One of the biggest issues was we think about curbside pickup and delivery is how annoying it is if that product says it's in stock and it isn't. So AI is being used to manage inventory. And if you keep retail very, very simple, it's matching supply and demand. Inventory accuracy is fundamental to this whole system. Beyond that, there's a lot of magic in logic in AI, meaning magic in terms of product innovation, augmented reality, and magic in terms of predictive, moving to prescriptive, and sending Adam items you didn't even know you wanted, or helping you with boring stuff, meaning how do you fill your cart up and anticipating what you may need for a holiday or a party. What's really important for retailers is industry-leading loyalty programs, because as you know, Adam, the data is so important. So having the best training models and having the money and scale to fund data science is very important. But as we look around, personalization will continue to reach new levels. And AI will be interesting because in many ways, this is very decentralized and open source. But companies have to test, read, and react to the myriad of things available here.
And one of those things that is available here from the macro level, Oliver, is the economic data that we've been getting in. Obviously, concerns about consumer spending here. 30 seconds left. How worried are you about the macro?
Yeah, it's something we're watching. Consumer confidence has been volatile, and the consumer really feels these eggs prices and dairy, and that feeling matters. That being said, on the positive side, unemployment is low at 4.1%, and also we still have wage growth, which is running at 4, above inflation at 3, and there's $1 trillion on the sidelines. That being said, lots has happened that's not positive, including adverse weather, flu, as well as these real egg prices that's making everyone scared and jittery. Also, headlines. How many times have you mentioned tariff in the past couple of days or weeks? It's not helping in terms of consumers feeling not great. And a lot of the stuff I covered, nobody really needs at all. So
Yeah.
this is impacting how we are
Yeah.
seeing and what companies are seeing.
Yeah. All right. Oliver, thank you so much. Everything that you cover matters for us. Appreciate your time.